Hi, I'm Bobbie Botticelli, host of Colonial Manor Realty, presents Real Estate with the Pros. So, as I usually do, I start with the weather report. The weather report is, it's a balmy, about 60 degrees, 2 weeks before Christmas, but it is raining like the dickens. It could be snow. So that's the weather report. Today, we have sort of a serious subject with the country and the world in recession, house prices plummeting down to nothing, the car industry in a real disaster, people losing their jobs, and finances in general are pretty tough for everybody. Really, I don't think there's anybody that isn't affected by this. So with that in mind, I thought, who better to have than my trusted banker? And I think that, if we all have a trusted banker, a trusted financial advisor, it does make it much easier to get through all of this. So I have invited Julie Thurlow, president of the Reading Cooperative Bank. And Julie, thank you so much for offering or agreeing, I asked you, agreeing to come on the show today.
I'm more than happy to be here.
So Julie, you must be inundated down at the bank with, do I leave my money in the bank? Do I take my money out? What am I going to do with the stock market? How about my mortgage? And I can't pay my mortgage, and I just lost my job, and a varied amount of things. So I think first, though, I'd like to just talk about Reading Coop for a second.
Okay.
Why don't you tell us where your offices are?
We have 5 branch offices in addition to the high school educational branch that we just opened this year. We have our main office at 180 Haven Street in Reading. That office has been in Reading since 1886. We also have an office on Park Street in North Reading and 2 offices in Wilmington on Middlesex Ave and on Lowell Street, and our brand new office in Woburn, which is at the Trade Center right next to the new courthouse right off 128.
And you know what, just very briefly, tell us about the new branch at the high school.
We're very excited about that branch, and we've got a wonderful branch manager over there who's been working with the kids. That branch was opened in September, and it's tied into a class that the high school is offering, which is a banking course. So the students actually learn about banking, and I think it's so important now, and I'm so glad that the school has an economics course for kids to understand really what's happening, how our finances interrelate with the economy at large, and how then they can manage their own finances, open an account, and manage it before they go away to college. So these kids are actually running the branch for us. The branch is open only to people that are at the school and have a business purpose to be at the school. So they're running the transactions, they're balancing every night, and then they're learning about the other aspects of banking, because it's not just about the teller that's at the window. There's other things that happen behind operating controls and dual controls, and even marketing and other finance pieces and investments. We actually had a field trip that took them to the Federal Reserve building, so that they were able to go in there as well. So
yeah, my daughter Alicia was so thrilled about it, because she had for several years been saying, because she sells with me, and she says, you talk to people and they have no idea that they need 5% down or what it takes to buy a house, and they have no idea about these things. These young couples, she says, they have to have something at the schools to teach them what it is. So she had actually talked to Pat Scatini about it once, and so she was thrilled when she heard it was up there.
Well,
all right, well, that's
I will
good.
credit Pat Scatini with the concept and the idea. It was something that he had experienced at a school that he had been at before, and he did approach all the banks in Reading, and we were the successful bidder as far as the RFP was concerned.
Oh,
we're thrilled with
that
it.
is terrific. All right, to the bank. What's the difference between a bank and a mortgage company?
There are huge differences between banks and mortgage companies, and I always tell people that really a lot of this crisis came when people started trusting their mother's brother's cousin's neighbor the way they used to trust their financial institution and their bank that was on Main Street. And a bank is an institution that has built up capital for years. We've built up our capital through growth and income over many years. We have the financial wherewithal to withstand ebbs and flows as far as the economy is concerned. A mortgage company is a pass-through entity. They will go out and they'll originate a mortgage, but they're not going to hold that mortgage. It's going to pass through their hands, and they're going to find somebody else to buy that mortgage with no intention of holding it for long term. So therefore, they're more transactional in nature rather than relationship in nature. And so, if I think that's the simplest way to characterize the difference between your local bank that manages your deposits on one side and then takes your deposits and lends them to somebody else to own their home, and through that sharing of funds within the community, generating the benefits for the community as a whole.
You know, with the citizens of the world, I think, getting older, and with the financial instability that we're in right now, more and more people are talking about reverse mortgages. And, you know, with the recent reverse mortgage situation with institutions not doing it properly and not advising their clients properly, what do you think about a reverse mortgage? I know that Reading Cooperative does reverse mortgages. And, you know, when people mention to me that they're thinking of it, I said, well, first of all, you have to be 62. But second of all, make sure you go to a bank and don't go to your mother's cousin's sister's neighbor because it's not necessarily going to be what you want to do. So briefly touch upon reverse mortgages and how you feel about them. Good, bad, indifferent, ramifications, and positive side.
I've actually given seminars as far as reverse mortgages for different senior centers at different points in time. And the thing I stress, and I probably say it 10 times, almost like a broken record, is a reverse mortgage is not for everyone. And you really need to very seriously consider whether or not it is for you, because once a senior actually accepts a reverse mortgage, it's very much going to be difficult for them to opt out of that. It's a very unique situation where that is a perfect fit for that individual. And that's the reason why the U.S. government, through the FHA, made such stringent requirements on counseling. You're supposed to have a FHA-approved counselor or HUD-approved counselor review your unique circumstances and certify that you truly understand what you're getting into. Somehow along the way, that counseling evolved into being allowed to be a telephone conference instead of a face-to-face counseling. And I really question whether or not somebody on the phone from California really can understand your personal circumstances. So having somebody truly evaluate what your situation is, whether or not it's an emotional decision, whether or not you truly thought out where all your assets are. And I would contend that it's a very unique situation when it could work for someone. The costs and the fees for a reverse mortgage are very significant, and what I have seen is that a lot of the mortgage originators that have lost business because subprime loans are no longer there and available have now jumped to reverse mortgages and are peddling reverse mortgages as an alternative to gain the fee income that they've lost through not having subprime alternatives to them. The case where I would say a reverse mortgage may be appropriate when you consider a two-income household where maybe a spouse has passed away. Immediately one source of income dries up through a pension that maybe exhausts or Social Security income that's not there. If the individual wants to stay in the home, there is a potential, if the home is the only remaining asset, for that asset to then generate monthly income as a stream, as a lifetime annuity to that individual that keeps them in their home, allows them to use that asset to generate the income so that they can cover the cost and the overhead.
Let me just stop you there 1 second, though. You're 62 years old, and your house is worth $500,000. And you do a reverse mortgage.
That's not the person that I'm thinking
Absolutely.
of. Absolutely.
And see,
not.
those are the people who talk to me, and I say, first of all, you're far too
talking
young
78.
because you're
Absolutely.
going to outlive your house. You're going to run out of equity in your home and be out of a home before.
Oh, actually, that's not true.
Well,
as far as the 62-year-old is eligible, and it is a lifetime annuity, and you can never, through having a reverse mortgage, lose your home, nor because of the way the contract is established and because of the fees, the FHA guarantee, they are guaranteed to receive that monthly payment, regardless of whether or not the home and the loan, if the home value is less than what the loan value is. So
So what do they do? Then they're staying there for nothing. That's
exactly,
a good deal.
and it is a good deal. But when you actually do the calculation, the 62-year-old, what do they get? $500 a month? Well, the cost of living is going to outstrip that monthly
So
amount
there's
that
an
they're agreeing
amount that
to.
they can only get.
And it's much lower for a 62-year-old than it is for a 78-year-old. So,
And if your home is loan-free, $500,000, you only get a percentage of that. Now, is
that's
that
correct.
And is that percentage the same at 62 as it is at 78?
Absolutely not.
No.
So it's a much smaller percentage than if you wait and utilize that asset last.
Okay. Yeah, there's a lot to a reverse mortgage, everybody, and you really have to think about it. And I do get this call, once a week or so, what about a reverse mortgage? And I say, first of all, out of pocket at the beginning, just a ballpark. At 62 or 78, doesn't. I guess at 62 it must be less if you're going to do a reverse mortgage because you're getting less money. But what are your upfront costs?
It's regardless of the age. I'm going to guesstimate between $15,000 and $20,000.
So that's right off the top.
Right.
So.
And that's the servicing fees for the loan, because that loan has to be serviced all the way through.
And people again do not realize that amount is right up there. So that's coming right off your equity.
Right. And that's the insurance that fee that's paid to the FHA to guarantee that you will get paid regardless of whether or not you outstrip the value of the home.
I see it in a senior citizen who's all alone, and this I've seen, seniors who are alone, they really have no family members and they're going to leave it to the cat museum. They might as well do that so they can live. Otherwise, they can't pay their taxes and their maintenance, whatever they need to have the home function.
Well, I can tell you the reason we actually went into the business, and it took a lot of research and for us to actually make the decision to do so, was for a woman who was older than 100 years old, and she had exhausted all of her assets, no family living, and she needed care in her home.
And that was her money.
And it was her money.
Yes,
and it was the last thing that she
absolutely.
had to liquidate.
Yep.
And she needed the monthly cash flow so that she could cover
And that's who
the
I
care
see
expenses.
it is perfect for.
Right.
Not for the couple who wants to take a trip.
No,
And,
absolutely not.
when they say that to me, we're going to do that, and we're going to do all the things we ever wanted to do. Well, not on $500, you're not.
Well, and
Number one.
and for you to see a spike of inquiries is just an example of the financial circumstances that we're in right now,
That's
where everybody is scrambling to find something they can liquidate.
That's right. Now, how stable is your bank?
Our bank is very stable. We're well capitalized and well managed, and we are growing. And in fact, it troubles me when they talk about the banking crisis, because the banking crisis is a few very large, poorly managed institutions on Wall Street, and they've managed to strip an industry of a reputation, and we may have not made all the crazy money that they made in the last few years by writing subprime loans and taking advantage of a market that was available at that time. But we made good money and had healthy earnings, and we did good things within our community. And now we're safe and we're sound, and we're able to continue to lend. In fact, we've lent this year 3 times the amount of money that we lent last year, and we'll continue to do so. Our deposits have increased 18% since the beginning of the year, and that's just a flight to safety. People looking for a place to put their money where they know that the value is actually going to increase and not decrease. And it's actually a good time to be a community bank in Massachusetts.
I was talking with you one day, this is a couple of months ago, and talking about people pulling their money out of the stock market and they're wondering what to do. And you said that you have so many people taking it out and now bringing it with you. And I know that you had sent, and I thought it was a fabulous idea, sent a letter around to your depositors telling them that their money's secure and the insurance. And do you want to touch on that?
Sure. A lot of people don't realize that cooperative banks in Massachusetts have 2 levels of insurance. And in fact, Massachusetts banks were really ahead in the nation. In 1933, they actually created an insurance fund, which actually was in front of the FDIC. And that insurance fund was to cover deposits. in all of the cooperative banks in Massachusetts, and the savings banks also did that as well. So the cooperative banks have their central fund, and when the FDIC, with the advent of the FDIC covered the first 100,000, and so the share insurance fund insures all deposits over 100,000. In the last few years, nobody's been concerned about deposit insurance.
Right.
They've been, putting the money in the market and been, picking stocks, and that's been the goal. The excessive returns, as far as the 12% returns, et cetera. I think the negative 20% returns are coming back and biting everyone now. But now people are worried about whether or not they're going to get the returns on their money. They're looking for banks that they can put their money in, and we have the full insurance, so people don't have to be concerned that they're bumping into that $100,000 limit. The FDIC just came out and increased the $100,000 to $250,000 for all institutions because national banks do not have deposit insurance over the FDIC limit. We have our FDIC insurance now, and then we still insure everything now over $250,000. I still keep cautioning people, though, because everybody, immediately says, "Well, then now you're all the same now that the FDIC has increased the limit to $250,000." But that's not true, because that's a temporary insurance. That's only insurance through December of 2009. I'm proud of the share insurance fund that we have here in Massachusetts. Its multiples of insurance are in excess of the FDIC's multiples, and I'm proud of the way the cooperative bank industry has managed itself over the last few years.
One of my biggest pet peeves is sell a house and the borrower says, "All right, I'm going to," one of those cousins, brothers, nephew, and I say, "You must be careful, because if that company goes bust the day before closing," and it very well could, "you lose your deposit. It's not the seller's fault the bank went bust, and you will lose your deposit." I always recommend that they go to their local bank that they deal with. I certainly recommend that they go to you. And they're always afraid, "Oh, well, but he said he can beat the interest rate." And I say, look at the APR. People just think interest rate is the end all, and it's not. They don't realize that APR, they can give you a lesser interest rate and then shove all sorts of expenses into it. How do you compare in interest rates?
Our interest rates are always competitive, and you're absolutely right. There are always teaser rates, and we always we run into that problem actually on the internet.
That's our biggest thing.
Where as a Massachusetts chartered bank, we are actually audited by both the Commissioner of Banks and also by the FDIC. And one of the things from a consumer aspect that they look for is all of our advertisements to make sure that they're clear, conspicuous, and accurate. The mortgage companies are not regulated like we are, and they can advertise, well, you get the flyers in the mail all the time, 2.99%, 1.99%, $1,000 a month on a $400,000 mortgage. How do you get that? But those things can be said. So things can be said on the internet that the interest rate is, and when you actually sit down at the closing table, things are different. And that's what we actually compete against. So the best that we can do is just do all of our business honestly and with integrity, and hope that people see that our transparency is what benefits them most.
Listen, we've all had to go on the phone and press 17 different buttons, starting with press 1 for English, and then from there, keep going. And only we'll call you back within the next 72 hours, or whatever the situation is, from your phone bill to your car payment to your mortgage payments, doesn't matter. Mm-hmm. Everything is on the computers and too many buttons to press. How easy is it to go to your local bank and sit there and talk with your lender? I mean, I tell people that all the time. Why would you want to go through having to press all those buttons? And then, especially today, with the short sales and the foreclosures, and I try to help people out, and they sit with me, we start calling their lending institutions, and the bank says, "Don't want to talk to you until you're 3 months late, and we'll get back to you," and pressing buttons. I'm helping someone now, she's in Florida, but her place is up here, and it's really just gotten to be a joke at this point, because she's not talking to the same person. I've been talking with them, I don't talk with the same person. They give her a different story every time. So truly, it's a plug for your local bank. If you don't go to Reading Coop, you must have, hopefully you have a local bank. Go to your local bank because that's what you want to do. It just makes more sense. Now, speaking of local banks, and you mentioned earlier your involvement in the community, Reading Cooperative Bank is major involved in the community. Tell us some things that you do.
Well, I don't want to, list off certain charitable organizations and
Right.
leave off any, but
Right.
so I'll apologize for not mentioning some of the wonderful
Okay.
organizations that we're just in the.
Well, let's start with just last week. You did the Christmas on the Common.
We did both in North Reading and
Right.
in Reading. We had Santa Claus in both of our lobbies. That's always a fun day, and all of our employees volunteer to come in and staff the bank so that all the kids can come in. It's a joyous day, and it's just a great time to give back and to see the kids come and see Santa, because that's really what Christmas is all about.
For them, yeah.
And the other organizations, the V&A Hospice House is one that is something that's near and dear to me. We've got so many of them. The Reading. Boy, am I pulling a
Well, you that's okay. I know that you've supported the football program. As a matter of fact, you have the trophy yet again in the bank. When we play Stoneham on Thanksgiving, the winner gets the trophy, and it hasn't been out of your bank very often at all. And how many years has that been happening?
I believe it was 1 year since I've been at the bank. Just 1 year.
So, and you're right, there are just so many organizations. Every time I turn around, I say, sponsored by Reading Cooperative, sponsored by Reading Cooperative.
Well, we have the Creative Arts Cultural
Exactly,
Connections
right.
evening in our lobby, and that's actually this year in coordination with the Chamber of Commerce as well, and it's really good to get the two groups together. So
And what's happening tonight at the bank?
That's the Cultural Connection, and the
That's
Chamber
the
of
one.
Commerce are having their Christmas celebration. But there's a lot of different things that we do, and then even the best ones are the ones that our employees get involved with. The flowers that they do, the buckets down at the train station.
Oh, see, now I didn't know that
Karen
you-
Sinnott does those for us,
Yeah?
and they are the most beautiful buckets I think in town. She just does a wonderful job. She's so creative. She's got such a green thumb, and since I don't have one, I have to give her all the kudos as far as that's concerned.
That is nice.
There's some larger organizations that we do work with, but we do also a lot of work with the schools. We did some work with a few other donors to get the lights on the football field, and I was able to attend that rainy first football night on Friday when they took the field on their first Friday night game. That was pretty exciting.
The kids really love Friday night games. I know, we've gone to them, and their family loves this. Julie, it was pleasant just now. Now we're going to get a little serious one more time. Very easy for me to tell people, the market is what it is, but it truly is a great time to buy a house. If you have a job, if you have the money, it is a wonderful time because the interest rates are lower, because the housing market is lower. It's one thing for me to tell them because, oh, guess what? I'm trying to sell a house. But how about if their banker tells them, do you believe that it is a good time to buy a house?
I absolutely believe it's a good time to buy a house. And everybody always focuses on what they lost. If they're imagining that their home was worth, and let's just use round numbers, $500,000 was what it was at the peak, and now maybe it's only worth $400,000. People automatically focus on that lost value, but everything works out to equilibrium. If you lost $100,000 on that home and you're going to buy a $600,000 home, that home would have been worth possibly $700,000. So everything works out to equilibrium. So the opportunities are there. But what is great to see again is interest rates back down in the low fives, and to be able to lock in your monthly payment so that you can actually leverage yourself into a home that maybe has that extra bathroom, has that extra bedroom, and to increase your capacity, and to be able to stay in the community that you want to stay, and stay in the neighborhood that you want to stay, and have that little bit of extra piece of house. Absolutely, it's a time and an opportunity. And the whole credit crunch, and I think that might be keeping people in their homes as well instead of out shopping. there's a presumption that there's credit crunch because that's what Wall Street says, and that's what the Journal says, and that's maybe what the Boston Globe is saying. But if you go to your community banks, as I said, we've lent 3 times what we did last year, and most of that has been residential mortgages, whether it's been refinancing people that had subprime loans that needed to get out of them before they were repricing and had not had the 3 late payments as of yet, and trying to get them into fixed rates or products that were best suiting their needs, and consolidating some loans so that they could actually afford to stay in their home. Those are the things that we're doing, and we're doing them with our cash that's on our balance sheet right now. There are lots of community banks that did not participate in the subprime crisis. That's what has really stymied up the process. It's the bad loans that were written over the last few
Tell me,
years.
how many bad loans have you written?
None.
Isn't that amazing? Have you had any foreclosures this year?
We actually did have one foreclosure, but it was not due to the loan that we wrote, but the loan that somebody else wrote after we had written a loan.
So that's amazing, because so many institutions, they just rack them up with their foreclosures and their bad loans. But, you know, and I wouldn't say that you're more strict than other banks in your criteria. You know, we call some places lily white. I mean, you make sure that they qualify, but I wouldn't say that you're more strict than any. I actually had no problem with anyone I've ever sent down there. And they're fast.
Yes.
Your bank is fast. You're not waiting a month to find out. You know pretty fast. And that's great.
You get the answers quickly. We have the online system that's available. People can go ahead and, at their own leisure, and apply online. You talked about answering the phone. One of the things that I'm adamant about is always having a lender available, whether it's lunch hours or anything. There's always a lender there to meet with anybody at any time, and we always have somebody answering our phone. Joan answers our phone, and it's always a human being. In our loan back office, when you're calling about processing, every one of those phones chases, so there's always a human being answering that phone.
That's so important for us in the business, but certainly for the customer.
Oh, absolutely.
Very important. Well, Julie,
it's kind of the old way of doing business, but I kind of like it.
It is the old way. Listen, I remember Les Stark 22 years ago. Hi, Les. Listen, I'm sending down Mr. and Mrs. Smith, and they need the $15,000 just for their P&S. All right, Bobbie, send them in. And they got the check. I mean, it was much easier to do it then, and they would work out.
It's only 2 pages then. Now it's 10, right?
But, you know, it's always been a great situation with the bank. Julie, I can't thank you enough for taking the time out of your day to come do this, especially with the busy evening you have planned. And to all of you, Merry Christmas, Happy New Year, happy all the holidays, and don't, easy. It's not so easy, actually, for me or for anybody else, but don't stress. If you're having financial problems, talk with your lender. Talk with your professionals. Talk with your financial advisor, and don't let it get out of control. And if you're thinking of buying, you should do it. And don't worry about the price on your house, because as Julie said, you're going to make up for it on the other end. Happy holidays, everybody. And again, thank you, Julie.
You're welcome. It was a pleasure.